So this is candle range theory, and I backtested a lot and found out there's a glitch in the market, most especially on H4, that is higher time frame, 4 hours of the chart. When the price is going up, for example, going up, going up, going up, going up, going up, and forms this kind of candle, then closes bullish. This candle opens here and encroaches the high of the last H4 candle, and it closes back inside below it. We have a lottery because this next candle right here will be bearish. And if we enter it in lower time frame, we're gonna be bearish for the next 4 hours. And the advantage of it is that when a bullish candle turns around like this and it has a low, for example, let's say its low is around this place and market turns around this place. So when we enter here, our target is going to be here of the 4 hours. So we have a lot of rooms. So after these 4 hours, that means when this one closes, we have the next 4 hours to trade the next candle, and we have the subsequent 4 hours. Whatever happens, market goes up or comes down, we are to reach this place. It may take several days, it may take uh, a week, for 4 hours if we want to trade it like that. But if we want to scalp this 4 hours candle right here, the third one, this one is enough to get a good trade in a day. And it's the same thing as regards this. So whenever we see the signal, this candle encroached this one and close to bullish, the next 4 hours will be bullish. So all we just need to do is mark the head of this one and go to lower time frame, look for fair value gap around this area, or uh, order block. We look for change of structure and wait for retest and continuation. Then we trade it all the way up. So how do we trade it? The best way to trade it is if we have uh, a swing around this place and this one turns around here. When we enter our trade around this place, we trade it back to this place. So this will give us a whole lot of room. So we have 4 hours here and the next several 4 hours until the market gets to this place. So the advantage of this is if we trade this on lower time frame, let's say 5 minutes, 15 minutes, 3 minutes, we will get what we need to get, like ratio 1 to 2, and get out of the market. So this is what I've seen. It's predictable, it's repeatable, and it is mechanical. Uh, Starting from H4, H4 is our signal. When we see it, it's a pure butter and bread strategy. So I've marked it out in several places here. So before that, let me read this. Trade this H4 candle for the next 4 hours. This one right here, after this encroachment could have happened or would have happened. H4 red candle close with will always produce another H4 candle. This is the close in its direction. Trade this on 15, 5 minutes and 3 minutes based base it on fair value gap, order block, and rejection and continuation. So what am I saying? I'm saying that if we have a fair value gap and the market comes back to test it like this, let's say market pulls back bearish, then we gotta wait for continuation so that market will go up like this before we start trading. Then we use our fair value gap. For example, here we use our fair value gap as stop loss. So to let me change this to red. So say this place is rejected. For example, let me clone this. I'm sorry. So let me clone this. Let's say this place has been rejected like this, and this is our fair value gap. So if it has been rejected on lower time frame, fine. So all we just need to do is background. Let me bring it down. So all we just need to do is to wait for this continuation candle that will face the upside and clone this, bring it. No, I want this one. So let's say this one rejects it too. In the most cases, we may see a sweep too. So when this one sweeps this one again and closes above it, then we can say this is how we're gonna do it. We go in immediately, take this and use the low of our uh, fair value gap and trade it all the way. So like this one right here, if the entry is around this place on lower time frame, this will go all the way down. So we target this last low that we had before this one. So no matter what happens in the lower time frame, I'll still have to be bearish all the way because I know my direction now. That is the reason why I'm showing myself this, so I can do it again, again, and again, and again. So the setup is right here. You see, when this one encroached this one, it dropped. We allowed this one to close, and then after that, it market went from this top right here, came to this low. Look at, closed it up right here. Look at this one right here too. Another, this thing still came down, targeted this low right here. This low got taken, this low got taken. Look at another one right here. We go back to the origin when it closed, 4 hours closed, then we sell all the way to this close. You can see this one right here and close to this one and went up, though it really got here, but there are trades in trades. So this one encouraged this one closed 4 hours, and look at the next 8 hours happened to be bearish. So look at this one. This one closed here. Look at this. The next 4 hours was bearish all the way. Now look at this one that happened over here. The next 8 hours was bearish. I know this one came down and this one came down too. Look at this one here. The next 8 hours. Look at this one right here. This one encroached this. We just need two candles. This one encroached this one, and look at 1, 2, and boom, market price action came down. Look at this one. This one dropped the next 4 hours. So the advantage is the next 4 hours can look at this one dropped and closed bearish, and look at what happened the next 4 hours. Look, this one dropped and dropped again. Look at the bottom. Market came to close over here, but this has to be long days like that. Look at this one, closed, came and crossed it, closed above it, And look at the next high happened to be the target. So as many places as we can see, look at this one happened over here. The next high, it happened right here, right here. Market was coming from here. It happened right here, and market went back to its origin. So when you see price, you see we just need two candles. This one dropped the next 4 hours, 8 hours. That was what we could see over there. Look at this one and crossed this one and closed above it and flew the market all the way back to its origin. Could take this, but you'll always get results. The next 4 hours is free money. The next 4 hours after that still repeated the same thing. So as many times as we can see this, look at this one right here. Look at this one right here. It dropped and crossed, it dropped, and the next 4 hours happened to be. So in this kind of situation where you see something like this, I would like to see a bullish candle facing up before I can say I need bullish, bearish, then continuation to the downside. You see this one, bearish, bullish. This one took out this one and took the price action all the way from this place right here when the market closed. You see this bearish is taken out by the bush and it's closed. After the closure, look at this through the market back to the point where market was coming from. So look at this one right here. It's not valid. We're talking about this one, this candle and this candle close to bearish, and the next 8 hours was bearish. Look at this one right here, this close to bearish, and the next 8 hours, and the one after it, and the one after it, and the one after it. All the way, if one wants to swing it, we go back to the source of this high and look at market came back to it. This could take several days or week. Let's even calculate it. There is something here that we can use to calculate this. See how many candles, and this is 46 bars. In 11 days, markets closed bullish. But this is a lot to take. It's a lot. So looking at this right here, just two candles is what we need. This one bullish, bearish, bearish, bullish. You can see this one encroached this and brought the market down to the next low. This one encroached it, took the market to the next high. And look at after this one closed, we had another bullish candle. So this is what I have noticed. Look at this one right here happened again. So that is what I've seen. So let's watch this on the left. So due to this signal right here that I've seen, based on candle rate theory, I changed my bias because in few seconds this candle is going to close bullish, and we can see what we traded from here. The candle rate theory that I traded is what is repeating itself right here. So with this right here, it is encroached, closed, encroached it below and closed above it. So this one, I will expect us to go to this point first, to encroach this point that I was pointing to first, here, here, all the tops up to this point right here. When it's gonna get there, I don't know, but that is my bias right now. So because of that, I will close this trade. Then I will look for the next position. So let's say the market closed right here, right now. This kind of a situation, I need a bullish candle to the upside to close before I can make my decision. That is a setup for this kind of situation where you have a bearish bullish condition like this with a wick. So now this is good. It's bearish bullish. In this kind of situation, we have bearish, and bullish after. So it has been something that I've seen before like this. This is bullish, bearish, but this one went up, so it encroached and closed below it. So this encroached and closed above it. So the next several hours or 4 hours became bullish. So we'll be looking forward to go bullish here as the market is turning back. So we'll go back and look for opportunity to go long right here. Since we're going long, we go to 15-minute chart. So we will look for breakout structure. This is where the market closed. So I believe we have order block right here, and we have to our left a fair value gap that the market is responding to right here. So the market has been responding to it. In I can see this closed up several fair value gaps, and it's responding to this lower high to make a new lower low. But all I need is a fair value gap with order block encroachment. So I'll be looking for, I got an entry here where this is gonna be my order block. Let me see, order block. So that's my order block. Let me arrange this properly so that we're not gonna have something too strong on it. So that is my order block. So I try to get a fair value gap and it puts to the upside. Since we have closed bullish on 4 hours, so I need to add my order indicator higher time frame fractal. So this shows This shows five candles. Bulls, white, white, or bull candle should be the red color should be white. So this is H4 that I'm seeing right now. So the bull should be green. Bull border should be green. This should be red, and this should be red. So now this is the encroachment that I've seen, and market is closed inside of the previous low right here. So this is good. So I'll be looking for this candle to form a wick and start turning to the upside. So I'll enter from there and make my exit at the top right there. All I just need is just a bullish turnaround candle that would disrespect the fair value gap that is being formed right now. So when it shows up, I'll continue recording. These are my actual 4 hours candle. So when this happens, I expect this one to be bullish. And the moment it's bullish, I'll be looking at the next candle to be bullish. So we're forming the wick of these 4 hours right now. And we're forming a fair value gap. This is going to last 15 minutes because we are on 15 minutes chart. So the moment we have something like this, then we should be good to go. And the bottom will be our stop loss, and that will be it. This candle has some 7 more minutes to go. We're going to enter trade live. Now, a fair value gap is being formed right here. And add a fair value gap. Okay. And again, the lowest fair value gap here has been disrespected. For this to go through it, the better this pulls down, the better entry we can get from that. This was a good one. Even there is a fair value gap right here too. It went through everything. This is a good entry, the second and the third one. So the current one we're dealing with, this is our fair value gap. I just need a bullish candle, and that will be it. When I get it, I'll start recording. I have to explain this. I took this trade based on a valid fair value gap that got encroached by this candle. We have two of it, one here, and it closed above them aggressively, even the third one here. So this pullback is an opportunity. But the best way to enter this trade is to get a closure of a bullish candle towards the upside from here, say from here like this up. When market comes like this, from here coming down like this, and we have something that has a wick and they can reject this spot to the upside, then we can have the low of this fair value gap as our stop loss, then we go from there. But seeing what can help me better, that's the reason why I got into this trade. I'll be viewing. To have a critical look what is happening right here on H4, that tells me that this candle will eventually be bullish. That happened here before. Look at this bearish candle. This one encrusted and closed above it. And the next several uh, hours, like 8 hours after, including the last candle, will be like 12 hours. All of them together went all the way up. So I have said something like this too happening again over here. And so I want this one to encroach this and give me a bullish candle like this, and I can use a fresh account to trade it. Now it appears the fair value gap has been respected, tapped into, rejected. If this closes in 5 minutes, that means we're going higher to the point where we came down, and that should be the end of this trade. So I'll leave it, I'll let it run. So on a good day, the entry is supposed to be the close of this uh, bullish candle that has rejected this fair value gap, and the bottom of the fair value gap supposed to be the stop loss area. So this is an early entry. If it closes bullish even below this, that should be the entry. So we have like less than 2 minutes to have the bullish candle close, and that's a setup. And we should be going from this point to this highest point right here, and that should give us like ratio 1 to 2. Looking at this now, we have 14,560 something here, and we have 35. So if we say 35 divided by 14 to have accurate picture, say 35, 44250, 44250 divided by 14,567 divided by 14,567.50. That is ratio 2.4. I'm supposed to use this, but I don't want to use it to cloud the trade up. So it will be from my point of entry to my stop loss right here into the top right here. Yes, 2.4. And if I went to 3 minutes, the 3 minutes even gave the same fair value gap, and the entry would have been on the same spot. So it is what it is. And now in safe hands, we trade with confidence. Let me delete every unnecessary arrow. This is Asia session high, Asia session low. So previous New York session high. I place this one right here to state where this candle closed. That's the reason why I have it on 15 minutes like this. And I don't want it to block the trade, so I'll leave it here. Let's see what will happen in the next 8 hours. This is another entry that I just found on gold. What happened here? This candle went up and this candle closed above it. Encroached it and closed below it. So I believe this next 4 hours is going to be bearish. So let's see when this next 4 hours candle closes. Closes in 3 hours 20 minutes. So we'll come back to see what is going on here. This is our regular 4 hours candle. So the wick has been formed to the upside. So I expect this to drop to at least this point right here. So that is for this trade right here. Let me go back to the ones though we're trading.